20 minutes after 7 o'clock, you're listening to Kaya Biz here on Kaya 959. Interesting conversations we've been having, and of course, appreciate the feedback that many of you have shared. Do keep your tweets coming at Kaya on Air. Use the hashtag Kaya Biz. Feel free to share your voice notes too, 063-688-0959. Well, we shift gears now to talk about all things legally speaking, and this time around, looking at how best we can remove barriers to entry in order to encourage growth in South Africa's insurance industry. And this is quite refreshing, right? Because if you think about it, we haven't had really a lot of competing insurance companies. A few have come on board, but is there enough space, and how best do we ensure that the sector is robust and competitive? Well, to tell us more, we join on the line by Viz Govender, co-founder of Everything.Insure. Viz, a pleasure to have you with us, and welcome to the show.
Hi, Guguletu.
A pleasure to have you with us here, Viz. I can imagine as the founder of an insurance company and having years of experience within this particular sector, you must have very interesting views on the competitive landscape in South Africa's insurance industry. What are your thoughts?
It is a competitive industry. It's a very solid industry, a very traditional industry, and very well regulated. So there's lots and lots of positive about our industry. We're a model for many other countries because of our regulation and our controls and our et cetera, et cetera. So lots of good things, but not a lot of innovation. As I said, it's pretty traditional. And what that then means is that, and conservative, so trying to get in for a new entrant is difficult. It's quite difficult. There's massive barriers, many barriers, and it keeps the incumbents and the historic players in dominant and powerful positions, and makes it really difficult for new guys to come in.
Yes.
I can elaborate on some of those barriers if you want, or what it is that's holding them back, or...
Certainly, and maybe let's start off with the regulatory compliance, because I do understand that that's one of the top grievances that many new entrants do have.
Yeah, the first thing to be said is regulation is good. And our regulators are really good regulators. The FSCA in South Africa, they're doing a fantastic job. And the purpose of the regulation is to protect consumers, and to protect consumers against, fraud, scams, fly-by-night operators, bad quality products, insurers not keeping their promises. So those are all the very good reasons that our insurance industry is regulated, similar to our banking industry, very regulated. But what that does is it imposes quite a burden, a compliance burden, and it's probably the number one most difficult and expensive thing for an insurance business, an insurance company, or an insurance brokerage, from a practice management point of view, to deal with, and it's not it's quite dynamic. It's changing all the time, and to retool your processes and your systems. It's very expensive, reprogramming, designing new workflows to comply. It's expensive and it's difficult. So that is a big impediment, and a big part of that compliance is about having suitably qualified and experienced and trained advisors, because it's such a difficult product to understand. Insurance is, you can't touch it, you can't feel it. It makes it that much more difficult for people to explain to you what it is you're buying, or how does it compare to another product. So the qualifications, the regulatory exams, the CPDs, the training, all of that, it's expensive, it's difficult, it's time consuming, and it keeps people away from either selling or being with clients, spending more time with clients, and that's where the regulatory difficulties come in.
Got you. What we also have seen commentary on is the fact that there's been a large number of new insurtech companies, the likes of Pineapple, Naked Insurance, and a few others who come to mind in the South African market. Is this a positive development? Is it having a positive impact on consumers, and I guess meeting consumers where they are? As we know, insurance can sometimes be a bit of a grudge purchase, right? And the flexibility that's required is at times previously used to be quite stringent.
Yes. So, insure tech and the digitalization and automation of the insurance processes, which is what InsurTech is. Is it a good thing? It's a very good thing, and it's exploding. That's the word I used in the talk I gave you a little bit. It's exploding around the world. There's massive amounts of investment, massive amounts of interest going into that space. I think we are in the insurance industry probably where the banking industry was, 20 years ago, when we innovated around online banking and app-based banking. And today, I don't think you would, and most people won't bank with a bank that doesn't allow you to be able to do things online, digitally, self-service, etc. Sure. Now, that's not possible in insurance, and until InsurTechs, came about, which is in the last, I'd say in the last 3 to 5 years, there's been a significant uptick in these digital-first players who, and often they're coming from outside our industry. These are tech entrepreneurs who've got good ideas as to how to solve our traditional problems in the industry, how to do it better, how to do it quicker, how to give the client a better experience. So you've mentioned a few, Naked, Pineapple, etc. They're really great brands. They're great companies that have started up and they're giving you a good online experience. It's chalk and cheese compared to traditionally. If you wanted to insure your car or your house today without going through an InsurTech, you'd have to probably spend an hour on the phone with a call center agent. Gotcha. And many of the good tier one products are not available to you. You can only get it via an intermediary or a broker. And what these InsurTechs are doing is they're making that available it's making it more accessible. It's getting the product closer to people, getting it to them at the right price, and allowing them to kind of buy it as opposed to historically where products had to be sold. It's the grudge purchase that you speak about, So that's where the big change is coming, and the next evolution of that change is not just an InsurTech that gives you access to a single product. It's super apps and digital marketplaces, and that's what Everything.Insure is. It's a digital marketplace that's slightly different from a product play.
100%. And that's why I guess even platforms like yours have proven to be successful, right? Because as you say, you offer customers a platform to actually evaluate the different insurance offerings in the market and choose one that's competitive and relevant to them, which obviously speaks to the ancillary factors of growth within the insurance space. And this really intrigues me, Viz, because I can imagine as the co-founder of Everything.Insure, you naturally have skin in the game, having worked for various insurance companies in South Africa. But given this evolution that we're on, this new digital ride, are there ancillary skills, ancillary jobs, ancillary companies that might actually be developed and find growth in the South African market?
I definitely think so. There's currently probably in excess of 200,000 advisors in the insurance space, and our penetration of insurance is quite low. It's better than in other parts of the continent, but it is certainly lower than in the rest of the developed world. So for motor insurance, as example, there's 1 in 3 cars that are insured on the road. So 2/3 of the motor cars on the road are not insured. So there's a massive market out there. There's a massive opportunity to further penetrate those markets. And there are different reasons, that people don't insure. 1, it's education. 2, they don't know how to access those products, how to get to them. And 3, it's too expensive, So those are just some of the reasons. Now, InsurTech and technologies and digital marketplaces like Everything.Insure, deals with a lot of that. It'll give you a range of products, so it's not just a product from an insurer, a range of products, and you can compare them, and these are all good tier one products. You can look at a Hollard product, you look at a Santam product, you look at an Old Mutual product, you can look at a Bright product, you can look at any one of these products, and you compare them side by side, you look at the differences, you look at the prices, and then you buy them. It's like you would buy an airline ticket or like you would buy something else, and it's giving you those options, and you can do it sort of in minutes from the comfort of your home, not needing to speak to anyone. So it's improving access to products for consumers, and we're so underinsured, we need to improve that. And then I think more importantly, and probably speaking to the other part of your question, it's about creating jobs, and it's about creating businesses. if you look at places like the UK, very significant parts of their GDP is generated from the financial services industry.
True.
In South Africa, it's a lot less. And it's because it's so difficult. The barriers to entry are so high that if you were a young entrepreneur that wasn't connected, didn't have the network, didn't have the capital, didn't have the computer systems, et cetera, it'd be almost impossible to start an insurance brokerage or an insurance company.
Yeah.
But these insurtechs drop all those barriers. And, a digital franchise, for example, as a business opportunity, has the potential to create significant numbers of jobs. We met with an organization today that looks at, they call it second chances for the lost generation of people who don't have jobs and haven't finished their matrics and so on. And we've committed to take on over 100 of them and turn them into entrepreneurs using InsurTech as a platform.
Sure.
And they're seeing that this is able to scale to thousands, with their help and so on. So we've encouraged and we think, it's a problem that we have to solve. Youth unemployment is a problem we have to solve, and this is an opportunity to potentially make a dent in it.
100%. There is so much more that I'm keen to ask you here, Viz, especially when it comes to affordability of customers, the opportunities that exist when it comes to insurance. And I guess as South Africans, on the back of the pandemic, of the July looting and unrest in 2021, and even the flooding that we saw in KZN, this has heightened the importance of insurance, right? And ensuring that it does speak to the pockets, the needs, and the desires of South Africans to protect not only their livelihoods, but also their hard-earned assets and short-term insurance. Briefly speaking, are you witnessing that those using your platform are being cognizant of their pocket despite the tough economic challenges?
I mean, there's certainly, these disasters have created awareness. That's true. So there's no question that although they're disasters and they're bad, from an industry point of view and from the consumer point of view, it's good in that it's created awareness. So people now know it is better to be insured. I should insure for the right amount and not be underinsured and all of that sort of stuff. So it's definitely created that. And then in terms of the economic pressure people are finding themselves under, 100%, we're finding that people want to shop around. People they traditionally don't realize that you're buying insurance every month. The fact that it's going off by a debit order makes you feel I've bought it 5 years ago and I don't have to buy it again. But you're paying for it every month, so you're buying every month. And what we find now is that where InsurTechs make it easier for you to get a quote and to compare, that more people are doing that. And they're finding a product that fits their pocket and a product that fits their need, and not necessarily a product that was sold to them a couple of years ago that might have